think we are ready to roll live. So, apologies for my voice this morning. Kind of is what it is. Oh, you're looking at the wrong screen. That's amazing. But that's okay. Here you go. Well, so if you guys are new or just tuning in, cool, welcome. I should probably post this on, what is it called? The Twitter, just in case they want to hang. Let me see, copy, tweet, yes, ready, set. All right, they can watch it later. Either way. Man, crazy morning. God, my voice is just absolute crap. Looks like we're bouncing a little bit here. But if you're just tuning in, welcome. We just do like a quick Monday morning little like preview, recap, and just really what are the main things that we want to be looking at for the rest of the week moving forward. I think pretty much everybody's on the page of what was moving markets last week. Geez, this is really bad, so I'm really sorry for this voice. But before we get started, I just got to point out options are not for everyone. We are an options trading group for the most part, or derivatives, what have you. And if before you start trading, you should call 1-888-OPTIONS and get a copy of characteristics and risks of standardized options before you start trading. So I kind of shoved it all into this quick recap. We were moving quite a bit this morning, and so I was trying to get some trades in, and this is what the result is. Kind of a rushed presentation, well, if you want to call it that. But as we go through, we'll take a look at some of the charts. But the biggest thing, clearly, all week we were looking to Wednesday for the FOMC rate decision. A lot of people, were talking about. Geez, this is bad, you guys. Hold on. A lot of people were talking about, 50 basis points, 100 basis points. If you're not familiar, 50 basis points is like 50 basis points is 0.5%. 75 basis points is 0.75%. And that's the Fed interest rate. So the Fed doesn't control the bond market as a whole. It's just that they're like the biggest player in the market, and they're just talking about their rates. The bond market as a whole, if you look at like junk bonds and things like that, well, that's something different. That's like your equities. So yes, well, the Fed rates are like the go-to ones that you want to watch. They really just they set the tone for the general market. And what's funny is if you watch rates and on things like that, the bond market itself has been screaming for higher rates for a really long time. Actually, if we go back to, I think it was March, and I'll show you guys in the charts, like the exact pivot where everything kind of flipped, and it was March, yeah, where the market just started tanking. There was a specific like event that happened that actually turned the whole market upside down, and so we'll go through that. But the market short term is very short-sighted, if you will, and I think what we saw was that 50 basis point increase was going to be probably good for the market in the very, very short term. But what we know is like in the long term, that is absolute crap. Like if there was a way to keep the market in a firm downtrend, it's to do these 50 basis point hikes. That's just not. The problem is that we have to fight inflation, right? And the whole commentary about everything was how do you get to neutral, right? And remember, we went over neutral is where interest rates are equal to the inflation rate. That's neutral. And one leads the other, right? So if you raise interest rates too high, too fast, that's going to shock the market for sure. But the idea is to bring inflation down. So if rates are going up and inflation's up here, rates are down here, and they want to kind of get them somewhere to even, right? Whatever that looks like. So they're not going to go boom like that. And it's like, so where does the Fed really see that their neutral target, if you will, is going to be? That's what we were really listening for. I didn't get a whole lot of that. Um, and uh, and the other part that nobody's talking about yet, and I'm sure they'll start to really talk about in the very near term, is this balance sheet reduction. Um, if you drilled in or you listened to, I had to go back and pull a bunch of notes because I didn't catch it when he was doing his speeches. I don't know if we have Jesse on also, who's part of the team, and Steven as well. I don't. Did you guys catch anything about him mentioning the balance sheet reduction on the actual speech, or no? Because I missed it, but
I did not.
yeah,
I did not. No.
yeah, it's all good. When I was going through the notes and stuff, I did find some of the stuff. Um, so when we talk about balance sheet reduction, this is the most important part, right? From a fundamental perspective, whatever you're trading, whether it's forex, you're trading the bond market, equity market, doesn't matter. Like all this specifically, this specific topic is like very high on the importance factor. So they're not really talking about it that much in the media, and again, they will start to. But that there's like $30 trillion in that money that we printed during the pandemic, which I think everybody is not anything. Everybody is on the board of like that was a good thing to do, but now I have to pull it back, right? So how do you pull it back? Well, you have to sell bonds. So the government sells bonds, they issue bonds, and they receive cash, right? That's quantitative tightening. When they were doing the easing, they were giving out cash and buying bonds. So now we're just having to reverse that. And that's what this balance sheet reduction is all about. So think about $30 trillion. That's a ton of cash. And I don't have the notes, but one of our buddies, Cujo, well, maybe he's listening. I don't know. But super smart guy. Love the dude, by the way. Cujo, he goes, there's a liquidity crisis in the markets, and he's spot on. There was an article he pulled up, maybe a link, and I might try and find it later if you're in the group. But for every X amount of dollars that the Fed has to pull back, that's going to have an impact on the S&P 500. And when we start talking about $30 trillion that we're having to pull back, I don't know that we have to pull back all of it, but the Fed needs to pull in dollars. And this is essentially like a supply and demand issue, if that makes sense. So there's a big supply of dollars. That's fine, right? But the problem is right now there's a big demand also. So people are still spending money. And so both are going up. Well, both went up. And now we have to pull back the dollars. And so that's kind of where we are, right? So if we have to, what I did find was that somewhere around June, the Fed's got a plan to buy back $47 billion, right? So this is this is a long time from now. It's April, May. It's May, right? So not till next month do they start some of this balance sheet reduction. There was I don't remember who it was this morning, but on like CNBC, the Kashkari was on CNBC this morning. He's probably one of the like historically very dovish Fed presidents. Sorry. Well, that's a little bit better. But he had turned hawkish, right? And that was actually the point that the market flipped when the last doves in the Fed flipped to hawks. That's in March, and that's what flipped the market. But they were saying, really, they underestimated supply chain impact. They're talking about there's a lot of cash in household bank accounts and their savings accounts, and they thought that people were going to start tapping into that. And the problem is that the jobs are still there. There's tons of jobs. That's not the issue. The issue is still spending, and that's this like tight labor market. I haven't looked for a job. I don't think I will, but I hear that you can still kind of go apply for a job and tell the employers what you want to make, which to me is wild. But long story short, this is June, August, 47 billions buybacks. September, 95 billion through 60 billion in treasuries. So that's the Fed rates, Fed bonds, and 35 billion in mortgage-backed securities. And the mortgage-backed securities piece, that was actually the biggest kind of earmarked piece that everybody's been talking about. Well, if they're talking about this stuff, but what I get out of this is like this is a long road to stabilizing inflation. So I don't see that, unfortunately, this is going to go away anytime soon. We may have some pretty big like pops in the market, but for the most part, I wouldn't be taking any major swings to the upside just yet. Sorry, this is bad. I swear it's not COVID though. So here's what happened. So the market was thinking about 75 basis points. We didn't get that. He specifically said we're not talking about a 75 basis point hike. Um, I think that as we move forward, we're going to start getting more and more people yapping for that 75 basis point or even 100 basis point hike. We have about 4 or 5 FOMC meetings left in the year, and we're now sitting at 1%. So if inflation is at 7%, and here's what you have to think of: if inflation is at like 7, 8%, and our Fed rate is at 1%, and we have 4 or 5 meetings to go, that's and if we're increasing 50 basis points per, that's 2.5 plus 3. So we're going to get to 3, maybe 3.5 by the end of the year. And is that going to drop inflation down fast enough? To me, this is like we're going to be dealing with this through next year, like 2023 type of situation. So, and this is just the commentary, right? Supply chain issues. Um, you know, this is what we're really looking for, is this PCE peaking, so peak inflation. If we are at peak inflation, the whole purpose of raising the rates is to drop down spending, and the metric of measuring that is through PCE and PCI, or yeah, PCE, PCI, one of those two. Uh, and when you guys start hearing this soft landing, so soft landing means there's 2 ways that the Fed can do this. They can do this very slow 50 basis point hike and have this like likely, I hate to say like likely rolling bear market, maybe, um, where it's just kind of choppy and keeps the market fairly flat um, until we get to that neutral state. Or they can essentially crash the market, and that's not a soft landing. And they can do that like full basis, like 100 basis point hike, and freak the market out and have spending just like pull completely back, and then they flip to neutral. So it's what's the plan to get to neutral? That's really what the question is. Um, I think this is pretty much it. So they do still have some stuff. I got tight labor market, yes. Um, Inflation plays. I haven't looked at MOS in a while, but commodity sectors and things like that are actually still definitely going well. So again, I didn't have the whole thing like I normally do. This is today's. I'm just gonna walk through. I'm just using, what is this, trading economics calendar, just a basic calendar, nothing crazy, filtered by just to US only. Uh, and so today we did have a speech this morning. Expectations. So consumer inflation expectations. So that looks like the market. So when you read this stuff, number one, this is whatever, UTC 7. What's Pacific? I'm Pacific. I think, yeah, UTC -7 is Pacific. So these are Pacific Standard Times. What's important when you're looking at this stuff is really the consensus. So, or forecast, either one of these two, consensus, forecast. This is what the market's pricing in right now. And looks like the market was pricing in a little bit higher than what actually came in. So we might see a little bit of a bounce. I hate to say it, but I think that this week maybe we could have some bouncing situations. So Monday we really don't have a whole lot. Wholesale inventory is not going to do anything. Tuesday, this is not. We got 1, 2, 3. Whoa, 4. We have 5 speeches tomorrow. Do you know that? 1, 2,
What?
3. Yeah, 1, 2, 3, 4, 5. I'm sorry, 6. 1, 2, 3, 4, 5, 6. So this is the stuff that I look at as like what's the Fed's they have this kind of like messaging campaign, right? Where essentially they need to like calm down, so nobody freaks out, and so you'll see a lot of this kind of stuff. So not sure what's going to come out. The next piece of data that we're going to be looking for is probably some like FOMC notes. But yeah, this whole inflation situation is absolutely number one on the radar. And so we have speeches like this. You're not going to tune in, but it's definitely something to be wary of. So that's it. So actually, actual CPI, right? So core inflation rate. So CPI, man, let's see. Consumer Price Index, CPI is, so here's what we want to do. So consensus, this is what the market is pricing in. So this is Wednesday morning, pre-market, 5:30 Pacific. We get inflation or CPI, and then we have a core inflation rate. And I've said this a million times. I don't know why they separate the two. I mean, I know why, but I think it's the stupidest thing ever. Core inflation does not include things like oil and food, which, like for me personally, is like my biggest spend. But the overall inflation rate, I think last week this started to move the market actually than core. So the Fed typically looks at the core inflation rate, and that came in flat last time. But the regular inflation rate, the one that does include energy and food, was higher, and that actually did move the market. So maybe this, look at this. This is where we're at, 8.5% inflation. Is that insane? Like what the hell is an 8.5% inflation? So again, this is weird. Market is looking for peak inflation. I don't know what to say there. So when the previous is 8.5, we want to look at what's the consensus or the forecast. That's what the market's currently pricing in. Now this is fluid, so it'll change as we get closer. But Wednesday morning, that's so far the biggest thing that we have on this calendar here. If we do come in below 8.5, let's say, well, it would actually have to come in below 8.1. So if we do come in at like 8 for CPI year over year, or even month over month is probably going to be more important. Look at this. Last month was 1.2. The market's pricing in a 0.2. What? No. Is that legit? Well, if the market's pricing in that type of decrease month over month, that means that the market kind of thinks that we're at peak inflation. And that's a little dangerous to me. Because if we don't hit peak inflation, so if this inflation rate is not is above 1.2, if the market's expecting 0.2 and we come in at like 1.4, oh, that's going to be a flusher. No question, that's going to be a flusher. So be really careful as we go into Wednesday. That's going to be the biggest thing. So inflation rate year over year, that's the month over month number is what's actually going to be most important, both the core and the standard. And again, for whatever reason, it looks like the market is pricing in that we're at peak inflation. So so if that's the case, this would tell me that right now we're probably due for a little bit of a bounce, which makes sense. And come Wednesday, and this number comes out, we could reverse that whole situation. So this is Wednesday. These 4 numbers right here, all about inflation. That's your number one so far. And then again, another Fed speech. Interesting, man. Interesting. So of all those things, there's another number called PPI, Producer Price Index. So if CPI is Consumer Price Index and what the consumer's inflation rate is, Producer Price Index is the producer inflation rate. So the question then becomes, if the producers are catching inflation, they pass it down to the consumer. So this it's a little bit of a leading sentiment gauge, if you will. I wouldn't say it's like super, accurate. But again, I'm looking at this. Yeah, they still. I wonder if this is like, if I'm reading this wrong. Like, are they expecting a half point increase above market way. Very well above market expectation, 4%. Yeah, no, that's what they're expecting to come in at. I don't know who's smoking this stuff. Like, whoever comes up with this shenanigans that we're at peak inflation already. Oh, we're set up. This is going to be a weird one. Wild ride, you guys. That's all I can tell you. But the market is currently pricing in, believe it or not, that we're at peak inflation. Get out of here. Maybe they're right. Maybe I'm way off. You know, it's very possible. But that's what you should read out of this, right? That's actually pretty important. So Wednesday, CPI, and then Thursday, maybe that reverses the Wednesday's move. Oh, we're gonna chop. So actually, you know, based on this, if I were to do like another one of those totally neutral trades, like Iron Condor thing, this might be a good week for it. I think we're at the end of the heart of earnings season. So after this week, we're definitely going to start slowing down. Yeah, I can see that like market going into serious digestion mode, especially sitting at these like key support levels at 400 on the S&P and 300 on the Qs. That would be where it happens. Import export prices, yeah, I don't think this is going to be a huge thing. Really, this is going to be, oh, Cash Corey again. Thank you, dude. Really, like the only thing that could really explode on the market side, I mean, maybe if we had some, what we haven't had is a whole lot of Ukraine headlines last week. We've seen oil this morning was actually going down pretty heavily. I still think that we're going to be in this kind of like sideways range on USO or oil in general until we finish tapping the strategic reserves. I haven't looked at that in a while, but I don't think we're done quite yet. That's just my personal bias. Like, I think that oil markets are being artificially held down. So sideways for now. Learn your credit spreads. Learn your like calendar spreads, time spreads, all that kind of stuff. Oh, look at that. The dollar had exploded this morning and pulling almost all of it back. Yeah, as they put it to work. So, you know, what I can say, this market has been not easy to trade and find even like a 2-day, you know, sustained move. It's really hard, right? If you're not quick on the trigger, taking profits quickly. I know people don't like to take profits or set stop losses for whatever reason. It's not a natural thing when you're used to investing and having been in this bull market for so long. You gotta start shifting to it, right? Make sure you have some cash. If we get this weird flusher, you know, I think that you can start buying some of these dips after a while. It's probably definitely after this week, and you know you have to sell the rips too. You can't really get out of that. So the goal is to accumulate more shares if you're investing, right? So if you're in profit, set a stop loss, accumulate some cash so that you can buy lower, right? If something's been on a run, they're not going to go on a run forever, right? So just take profit when you have it and add a little bit when it's down and take a little off when it's up, and you'll be fine. Don't try and, you know, none of that, you know, full port loading up on massive positions in one shot. It's just very little nibbles across the board as time goes on. So I think I'm gonna take this down for the most part. We just have Disney this week in terms of earnings, and this is the weird stuff, right? Like, we're 24 deep in the Dow 30, and it's not that bad when you look at it this way, but you know the market kind of tells you otherwise. So there's that. What I'm going to do is I'm going to take, as we normally do, just a 30-minute chart across the board. I'm going to start with SPY. What I did say that I wanted to do was, like, I have all these vertical dash marks here. These are FOMC kind of fundamental events that create these technical levels. And what did I say? March, right? So right around March, we had a rate decision here. I think this is the first one. And I don't remember, I think it was somewhere in here where we actually got, did I mark it? Nah, I don't think I marked it. Dang. Should have marked it. Oh well. Um, maybe up here. Yeah. Man, I wish I would have. It's probably one of these two. I know. I remember it was March where like Kashkari or Brainerd. I think it was Brainerd. I don't know if you guys remember that when Brainerd came out and was like, "Oh, she's a hawk now." But right on this NFE, like and FOMC minutes section. So for now, what I have these, I have some arrows here. I don't remember what those are. But we're just going to take this again. And orange boxes here for me, average weeks range. I'm going to take this and just simply, I'm going to hide some of these lines real quick. Create two levels. So on the downside, right, 392 for S&P, that's an average weeks range. So what you should take out of this is if you're on the short side and you're going short and you do find yourself somewhere around here, you should probably be covering, taking profits, because we're not likely to move a whole lot lower than that from an average week's perspective. On the upside, same kind of thing. If I take this morning's opening, 418, again, oh, that lines up beautifully, dude. On the upside, if we were to, like, if you're going long and you find yourself at 417 area, look at this. This is danger area. You want to be taking profits. That's what you should take from this. If you want to go completely neutral, you can kind of cover both of these ranges, right? So probably 420 to 390 iron condors for a week or so. That would be really, really ideal. Right in here. But man, if we do get up to this 417, this is a serious pivot right here. What is this, March? Do you guys have any levels on SPY that you want to point out?
So I'm carrying over the 405 level from last week. 410 I think is still going to be a battleground. Obviously the 400 psychological level.
Yep.
And I was looking at like 390, 392. So you covered that to the downside.
Hold on really quick. So your 405 pivot, right?
Mm-hmm.
That's last week's pivot low, I assume.
Yep.
All right. So when you guys are putting your lines on your charts, I have some of this automated, but weekly, yeah. So there it is. So the orange lines here are the weekly high and low. 405, Steven's talking about. That's when we might in chat or things like that say weekly pivot low. So that was last week's low, the low of the week. So that's going to be a pretty critical level that actually we opened at. So
yeah, right there.
Yeah, we opened at the low. I mean, really, like out of the gate, and this is probably why we were all kind of. Oh, well, I'll tell you, like definitely late for me. I'm not sending signals this early or anything like that. But when you break a key level like that, and I say key, it's a weekly, daily, or monthly high or low of the prior week, month, or day, and you hit it, you open below, comes back up, and you fail. This is short, right? It's a short, and it's a short right there. And then it's just really a question of like how far are you pushing it, and what do your stop losses look like? Yeah, we're coming up to it again, which could be another short. But that said, if we do, man, this was last week. If we do break above it, yeah, you can't be bullish until you're above it, and then you can come back down, and you want to see this little bounce, right? So just because it's breaking, some people will say to take it, that's fine, but you got to be really cautious. You'll get those. We've seen a lot of what's the word, like bear flags. If you don't like to trade like to the downside, here's a good one right here. What you do need to do is like you'll have a level, something like this, right? Where was this 426, and then you have what looks like a little bit of a higher highs or higher low type situation like this. Really, realistically, this is just a giant bear flag. So be really careful. Maybe you would have thought that this was actually Oh, there you go. This is a fake out right there. So we're going to see a lot of these situations showing up when you're at these pivots. If you're in a rolling bear market, it just, what you don't want to do is you don't want to buy at support. And for everybody that's coming in, having traded the last year or two, you're probably used to buying at support. I can't say this enough, but like, that's not what you want to do in this kind of market. If it's just clear and nothing else is really pushing, we're going to get a lot of these big old pushes to the upside, right? Off of these, like low points here. And you could trade some of this counter trend stuff, but just know you can't get a multi-day rally out of this. We just haven't had it.
Yeah, that's what you just said there. I think is really important. It's these little bounces to the upside, like what we just had. That's a counter trend move. So if you are taking something to the upside, just know that you're going against the current market trend.
Yeah, I mean, there's nothing.
A little bit more risk. You can do it real quick plays, but just know it is against the overall trend right now.
Yeah, there's nothing. Just to be fair, we're not in a. Yes, it's like a 20-year bull market, this kind of thing. And I was talking to a buddy, we were measuring some of these other moves. Like, look, this is 20% downside move, 10% downside move. I don't know if you guys, this is seared in my mind because I took like the hugest loss Christmas Eve 2018. This is a 20% downside 2018. If we were going to be in anything, unfortunately, this is like 2008 is like financial crisis stuff. 2000s. Yeah, so this is the dot-com blow-off right here. I don't know if you guys know. And this is where those green and red lines, we actually had a yield curve inversion up here. This is a 48% drawdown. This was bigger than the financial crisis. And, we're not quite there yet, but if we had anything like huge bull market, right? Look at this. I mean, that's a huge bull market. So, but 48% from the top, right? You're up, by the way, right? 250% on the index, right? From 95 to 2000. That's the .com like run, and that's 5 years. 5 years. That's a nice run. But on the downside, yeah, it came down 50%. I'm not saying that's going to happen, but if there was anything that's reminiscent to me right now, it is actually that kind of situation, right? Because we were just so huge growth, huge tech, like that's the only industry that you want to be in. It's a very similar feeling. Hate to say it. And I'm not like an epic ultra bull or anything like that, but you want to wait till you get to this kind of balanced, stabilizing situation. So we're probably more like here, and so potentially one more leg. Who knows? Sorry, my 2 cents. Where were we? Back to a 30-minute chart. Yeah, so like if you're not familiar with these kind of like situations, right? If you're not fully above, that's why we want to wait till you're full. Just don't try and bottom fish. Yes, I know this is what, how many percent? 3.5% to the downside, and then maybe 3.5-4% to the upside. It feels good, but just know we are very, very much in a bear market, right? So unless you're really breaking through, and then you want to watch for a bounce on that same level, it would have needed to come straight above, right? And you would have, at that point, maybe you could have taken an entry, but not until then. For now, you can draw these kind of lines, and this is your typical bear flag setup, right? Once it broke, you know that you're going down. And you could see this if I'm using these pivots, right? Here's that weekly pivot low once again, just like we were talking about this morning, right? Where's the weekly pivot low? It's right there. Yeah. And so, I mean, just be aware. This is the kind of situation that we're looking at right now. You got another one. Jeez. Look at this. What kind of trend is this? This is not an easy market to trade. I'll tell you that much.
No, it's not. It really isn't.
Yeah. Oh, are we already dumping? Oh, that's beautiful. So this morning's bounce probably. Oh God. Has anyone seen crypto?
Mm-mm.
Oh God. Oh God. Here's my crypto. It's not even on the screen. Oh God. Let it fall, man. Don't try and catch this knife. I don't know what to tell you, other than, well, right now crypto is leading for, it trades on the weekend. It's telling me, I saw this happening this weekend. I'm like, all right, there's no way I could be bullish coming into Monday. Wow, this is ugly. You guys see anything this ugly before? Oh, God.
I have not.
Oh, God. It's so bad. We're talking some of our buddies. I'm like huge fans, Harmony One and Avalanche for sure. But, just, yeah. This is that same.
Since 2017.
Yeah, this is the same setup, right? It's hard to see if you're not looking for it, and if you're not used to trading, like to the downside. What I would say is, what's funny is that this right here, this is like super fake out. So Bitcoin was coming back up, right? And I'm just pointing this out because I have this feeling we're going to see a lot of this for the foreseeable future. So I want this to be like in the forefront of your mind. It's not actually at this green that you necessarily want to take the short. You can actually, right here is a fake out, right? Where you have this critical, like clear level, right? Top, double top, right? Acting as support here. Resistance, and we typically sometimes looking for something called SR flip, where support turns into resistance or resistance turns into support. And so this was resistance, was support, then became resistance, and you want to turn into support once again. In this instance, you might have been, thinking, okay, I can go long if it bounces here. But just be really careful. In these markets, you'll see a ton of fake outs. It's not until you actually get really here that's a better short, just above that level that you would have normally thought about, right? And in that case, it's a better short, or after it breaks down right there, right? This thing needs to go faster. Yeah. So this is like selling credit spreads. If you miss all of this, that's fine. That's probably a higher risk trade. This right here, you'll break down. You'll have this line. When you get this rejection, that's a very clean trade, in my opinion. That you could take here with the stop right there at that 43. I should have taken that. That was clean. Anyways, just know that you're going to see this set up a lot in the coming weeks, maybe months, probably months. It's choppy. This is not clean, but it is what you probably want to be on the lookout for. No question. And then you get the dumpster fire. Oh God. It's so bad. It's so bad. Anyways, yeah. So we're not making new highs. Just to be clear, don't fool yourself. We are just making a series of lower highs and lower lows right now. Give the market time. No need to chase, go bottom fishing or anything like that. And the reason that we put out these kind of like average ranges here are because, that if you were to take your little snipey shots or something, you want to cover, really. You want to cover your shorts at this point. That's ideally what you want to do. Oh, that's crazy. So one thing, so we could do the Qs. I mean, of all of them, I can't even. We're not in an uptrend. So don't be bullish. You don't have to be bearish, to be fair. But you don't want to be super bulled up. If you get a nice clean catch of a bounce, just take profits quickly. That's what I could say is more like that's what you want to be doing. Yeah, we're still here. Do you have I'm just looking at 288 on the downside is the average week's range for the Qs. Does that take us back? I'm just going to see if this pulls us back to level. Yeah. So 288 happens to bring us back to this, wow, November breakout.
Jeez.
Wow. What was COVID? Yeah, unfortunately, yeah. If we don't hold that, and I'm not going to go super bear, but this would be your real support 233. So I mean, I would expect a bounce somewhere under 300, and then we'll come up. Maybe we hit this 315 from there, and if you don't hold that 290 level, that is what it is. I don't know what to say.
Yeah, I've got 268 to 27 or 263 to 270 as a huge order block.
Huge, yeah. Absolutely.
After 290, it's pretty much free fall down to that area.
Very much so. So that's what we're looking at. Like 266 is right here. You have an October, September pivot area. This 290 is a key support level. We break that, it's just like free fall, boom, to this next border block. This is a huge, like a 1 week candle. It did hold, but yeah. You got 2 levels of support below that. And now we have a lot of resistance, overhead resistance now, right? So we have a lot of overhead resistance of this 315. That was the prior month low. That is broken. So we were waiting last week to see how this whole thing kind of flushed out. Didn't want to say it, but what's the selling May, go away, come back in September. One thing I could say that I'm probably looking at taking a counter trend move. So knowing that these are mostly downtrends, if I were just going to take a counter trend move at this point, remember we were talking about TLT as the bonds. With everything that was going on and Powell saying, oh no, we're absolutely not thinking about a 75 basis point hike. I think that the bond market has been screaming for rates to increase more than what they have. And so this is not the Fed funds, to be fair. This is just actually Treasury bonds, yeah. So this is just the other, we'll see. This one has definitely sold off quite a bit. So if I were to take, and I'm at my profit targets, actually below, I think my targets were on 115, and we're now sitting at this pivot here, right on 112. I might take this for like a counter trend, maybe like couple dollar bounce, which we're basically getting here, up to probably here, 118, at which point I'm looking to short again. So I've been trading this actually for a little bit, and I think it's been pretty good if you're checking your levels and making sure everything's on point. Yeah. So prior week low. This is what a counter trend bounce would look like. You get this counter, like prior week low, open below, bounce up. As if it closes over 113 today, this is target 115, and then target 2 is really 116, all the way up to as high as last week's high of 119, and this is just a range bound trade. So if I were to take this counter trend move, it would be just that, and honestly I'd really be taking profits more heavily around 117, knowing that we could fail pretty quickly. But yeah, for right now, this looks like this is bouncing actually right now. So I did see what I see. I was looking at this today in TLT. Short term, there was a lot of these 115 calls. Yeah, still about 180. If I look at the total chain, time and sales, yeah, I got a lot of May 120s May 114 to 120 debit spreads, things like that. They're not going May monthly, May 20th. So they're not going very far out at all. Might be better to sell some put spreads, or maybe both, actually. Bull put spreads, plus that'd be like a little risk reversal on that. Just gonna take a look. So keys are just falling on their face. I don't know what the hell happened to the Russell. This thing is toast, man. We broke some serious levels. You guys see this at all last week?
Oh yeah, absolutely.
This one is just a dumpster fire. So we had a huge pivot at 185. That's a big one. Oh, coin. Yeah, coin along with the rest of crypto is just a massive bloodbath. It's fun, by the way, to trade to the short side if you can, be down for it. But yeah, so this takes us to 169 on the downside for the mid cap. And honestly, I think that, look at this. This is a daily chart of IWM. We got some serious room still. So maybe some debit spreads to the downside, 165, 168. We'll probably push down a little bit through that. I'll take a look at this for a potential swing trade. If we were going to get anything sustainable. So I'm looking at the chain. Oh, man. Yeah, I see 175 puts. I got a ton of June 168 puts. Look at that. Yeah, it's not bullish. Holy camoly. What's IV on this? I don't actually have 74 percentile. Holy crap. So IV's pretty high right now. If it is high like that, yeah, just careful. We could bounce, but selling call credit spreads are where your edge is going to be, no question. 210 is just epic resistance now at this point. But we've broken one level, like the main level support here at 209, and a second level at 190. So from here down to 170, there's just not a lot holding. There's just not a lot in front of it. So that might be a pretty good trade, like a fast free fall. We get some extra IV. I do like that. USO, I think, yeah, USO would be this condor that I had set up a while ago. But this was for like months till, I think it was July, was a 80, 85, 70, 65, kind of like $5 wide iron condor. Probably just going to be chopping. Look at this tight range. As much as oil feels like it's been, flying, it's been in this pretty tight range, give or take 11 points, right, over the last 2 months. So I see this like continuing. So that's probably a good neutral trade. Yeah, VIX. If we crack this 35 on the VIX, by the way, we're going to be in some serious flusher territory. And we could do, you might be fine to do your VIX just calls, actually. I wouldn't need to do much more than that. Oh, Rivian, great, amazing. I'll check on that. So what do you guys have on the watch today? We can check out some stuff. I do have some other trades if you have them. I have an IBM short diagonal, if that makes sense. So long 130 put, short 128 put for this week. I'm going to keep that on for now. I was seriously looking at rolling that short put down and out again. Not quite there yet. This is a clean short on IBM today. Let's see. But it's a good trade. Tesla, wow. So this is why these lines are important, like just your key pivots. Oops. So I'm moving to a 15-minute for intraday trading. But again, yeah, 825 was last month's low. So purple line, monthly pivot low, right? How important is this? This is, look at that. You want to have these set up on your chart so that when they happen, you see it, you can take advantage of it. Otherwise, you're just fumbling around trying to figure out if that's a trade that you should take or not. If you have these automated or on your charts, then you're good to go. Downside, oh geez. What do you have your downside targets on this, Steven?
On which one? Sorry.
Tesla.
Oh God.
Yeah.
This morning I was looking at 800. I mean, obviously, because that's a huge psychological level, and we bounced there just like we did at SPY when it hit 400.
Yep.
Let me zoom back out real quick. 750.
Yeah. So I'm trying to snag this.
Well, yeah, like what is this? 760.
Yeah, I'm trying to.
And then below that, all the way down to 700.
Yeah. So I get the same thing. So we're coming into this kind of like, what do you want to call it? Like supply zone, so to speak, right around this level here at 8, right? That we bounced off this morning. If we break 8, I think what he's saying, is that next stop 750, which is right here, where the buyer stepped in March, and
I've got like 758.
Yeah, in February.
If you want to be super exact, but
yeah. So this is when you read your charts. So when you see these big candles, so the buyer stepped in here after this bottom flush, right? They sold right here on February 23rd at 750, and then it flushed, and they saw it coming back up. And they're like, slam it, buy it back, right? I want to be back in. That's when you get this whoosh to the upside, right? They held, maybe they sold a little bit. Came back to that same general area, and they're like, okay, cool, I'm doing it again. Boom, slam, buy button, and then you're off to the races. So anybody that still has any positions from this level right here, they're about to be done, right? Because if they didn't take profit here, and they're coming into, a trade where they're about to go negative, do you think they're going to hold it in this market environment? That's what you want to look at, right? So this could be a flusher zone, 800 to 750. Get a little bit of a bounce here at 750, but it'll be like this, boom, boom. If it's a full-blown flush, right? You'll get this bounce. This seems like a big bounce, but it's not. And good night.
Yeah, below 700, if we start to seriously bleed off, just in Tesla, I'd be looking at 550.
He said that just now. 550. Yeah, right there. Yeah, 600, 550. Yeah. So, I mean, do your charting, get your line set up. If you don't have it automated, that's cool. You don't have to have it automated, but there are easy ways to automate that kind of stuff. But yeah, read your charts. Like, where were the buyers stepping in, right? They stepped in here, 650. I think it's time for that butterfly, dude.
Mm-hmm.
Earnings in July, May. Yeah. So, you know what?
Oh. And I don't want that to come across as like I'm predicting 550. We're just going to trade exactly what the chart gives us.
Yeah.
If we keep getting downside, we're going to keep trading to the downside.
For sure. It was Jesse that was full porting those $250 puts. We know.
Whoa, wait.
Whoa.
No? Okay. You guys want to?
No, I full ported and then cut it 10% when it went 600%.
Oh, God.
That's more like it.
Yeah. Very weird situation here. I have, I'm looking at the June. So if we know that July is earnings, right? I want to look at the month before, or some of the series, they're called series, expiration series before, so they don't get hit with this IV. I'm looking at, 800 puts with a ton of volume, 1,200 volume today. I'm looking at 700 puts with 1,300, almost 1,350 volume on 13,000 open interest. The 600 puts for June, almost 2,000 volume. And if you're ready for this one, the 400 puts at 1,750 volume today. What I would take from that, though, and I think you could take a lot out of that. And then July itself, July 600 puts. I can put together a butterfly. Pretty interesting one, actually. If I just use those 600, 700, and 400 strikes, man, Thinkorswim it just absolutely hates me. Every time I try and model something, it freezes on me. Detach. But a butterfly is a 3 option order. Buying a higher strike, selling 2 somewhere in the middle, and then buying 1 lower. And yeah, right now this is frozen. Great. I wish I could show you, but here, I'll do it this way. Screenshot it. This is how bad it's freezing on me. If you had the collateral, right, there is a potential setup. So buying 1 700, selling 2 600, and buying 1 400. This would be about, oh, it wants to pop up for me now. Max profit right around 600 beforehand. $600 max loss. But yeah, that's some serious profit. Something like that. I don't want to model this right now because this is going to change all over the place. But take a look at using spreads to your advantage if you can. Because just as an example, just a put on Tesla right now, just that $700 put, gosh, that thing is through the roof. That's crazy expensive. A $700 put for June expiration on Tesla is almost $4,000. So with a spread, you can take essentially a $4,000 put and turn it into $600, and it'll have the same kind of risk reward. Well, it'll have the same probability. How's that? And payout. So do you want to spend $400 on a put outright, or $4,000 on an outright put, or do you want to get the same kind of payout if you're right in direction for $600? Right. So this is the time to start looking at that kind of stuff. Oh God, just what is wrong with crypto? It just continue to dump. I'm just like, oh, it is bad. That is bad. So crypto's been leading the charge, man. So I can tell you, Amazon has reported earnings. It's out of the way. So we're going straight to what? $2,000. No, do not collect $200. Go directly to $2,000. Gee, many crikey. Same thing. So weekly pivot, right? Check this out. This is why these are important, right? We tagged it this morning, failed. So if you're in the bull camp, you're used to drawing these kind of lines, right? These little downtrends. So now what you could do is you could wait for this to pop up, if it does, and then you take it short. Sorry, but that's really ideally. If this does break, you'll get that little, like, what feels like a very violent push to the upside, but just know it's a very small market structure. This is not going up right now. Amazon's got that split, right? Amazon and Google. How's Google doing? I didn't really want to look, but Google's doing.
That happens this month, doesn't it?
I think so. Google's doing better than Amazon. That's for sure. Based on this, way better. I mean, yeah. This is, of the two, I'd much rather Google over Amazon, no question. And I think the market's saying the same right now. That's brutal, man. So 22.60. If you get a chance to take that to the short side, that's more like what you're looking at. Just what it is. My screen, my crypto screen is just like, look at this right now, man. Is that not epic or what? Have you ever seen anything like that?
It's just,
that's just straight free fall. See you later. Yeah.
Lots of panic selling.
Yeah. All right, I think we're good. We've got time. I think the TLT, like if you're gonna take a counter trend move, that's great. TLT. I did want to say, hey, look, if you guys are not naturally bullish or bearish, that's fine. I'll take a look at Ken's coin. I'm sure that coin is just completely a bloody mess right now. You can look at these. These are not investable. These 3x leverage ETFs. These are trading vehicles. Just know they are meant to go to zero, so they're not something that you can hold. Look at this. You don't want to hold these. There's a daily fee assigned to them. But when you get into these kind of like bearish, rallies, you can use these to hedge your portfolio. So if it's a 3x ETF, right, and you got, $3,000 of S&P, this thing is just falling, SPY or whatever, you could buy, a third in SPX, and that would hedge you. Same thing, SQQQ, right? Just so you know, these are available temporary positions to hedge SOXL, SOXS, to hedge a portfolio. So this is the 3x inverse bear semiconductor. I don't want to spend a whole lot of time on them, but I do want you to know that they're there. So coin, Ken's pointing out coin. Blame Russia for that crypto drop. Oh, I don't know what they did, but yeah, coin is all time. Wow, this is sub 100. Ooh. Earnings. So look at this. You guys people think are pre-market, like a run up into earnings. This is more like they're scared of being around during earnings. So you get this dumb ski into earnings, unfortunately. Oh God, I don't think I ever had 100 on. This is uncharted territory.
It is, yeah.
Yeah. So you're free fall, unfortunately. That could go pretty parabolic. If it's not technically parabolic already, you didn't even get to test that $100. It just like poof, the floor fell right out. Yeah, this will probably be 75 before earnings. It has $100. There's that weird number whenever a company is breaking 100, they'll jump around between like 75 and 125, but around 75 is your typical pivot level. But if it starts heading up, that could be a pretty good counter trade too. Are we getting a counter trend? Crypto kind of is. I mean, that was a brutal. That was an epic crypto flash crash for you, live. But yeah, here's your low. If you don't pop above this, it's going down. But if you're counter trend, this is that exact. This is a 1 minute chart. Sorry. But you see this same situation, the same exact setup. It doesn't matter what time frame you're looking at. It's all the same. Like you'll have this, right, situation. You get these little bottoms, right? The second that you break, you see them, right? You break, retest right there, boom, clean short, right? So same thing. If you get it, right? It doesn't matter how big or small they are. It's gonna play out the same way. Oh, it's dumpy. So careful, caution, right? If you were really, this is it right here, right? So fake out. So you have a pivot high. This is the fake out, right there. Everybody thinks, oh, it broke structure. It's a higher high than this high. That's true, but in this environment, careful about buying these. It's not what you want to do. You can hang, you can watch, but so next one is here, right? So if this comes up, something like this, probably you get this little chop, and you get this dink. That takes you to what? Well, 88, somewhere between 88 and 87 would be that short, or what do we just outline? How does it do? Chop, 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 chop. There you go. Or that, right there. which would be a nice little intraday head and shoulders for you. There's your market structure. Cool. All right, let's get to it, man. Jesse, you have any you want to take a look at real quick while we're here?
No, for my futures and Forex is going to follow, especially if you play the majors. It's going to follow the U.S. dollar, so we went over that. But for my futures guys, our chart on SPY is going to be pretty directly reflective on ES as well. So same sort of levels, 400 level on SPY is going to be 4,000-ish. So I had pretty much all the levels we talked about in SPY, 405, and then below 398 and such. So yep, that's my little tidbit there. So.
Look at this dumpster fire.
Yeah, I'm short on it right now.
Yeah. What's your level? Go ahead.
I was just gonna say we were talking about companies that are still trading at really high multiples, like
CrowdStrike,
Crowd and
Amazon.
such. Yeah.
Amazon was on the high end, right? So just to be fair, like I've joked around with some of the guys in our group, guys and girls in our group, like growth is dead, tech is dead. It's not the market environment that you want to be investing in high growth, high multiple stocks. And I don't see multiple like PEG ratio is a metric that a lot of fundamental traders used to look at, right? If you're having to do like PEG ratio stuff, that's not where you want to be. But CrowdStrike was probably on the list of the highest. It was CrowdStrike, and unfortunately CrowdStrike is in security. I do like the sector, but clearly this is Steven. This is an epic short right now, is what it is.
Absolutely. So unfortunately, it's not the same trader it was a few months ago. I don't even think there's any volume on it.
Yeah, we need to see liquidity on option strikes. Not on the stock itself. That doesn't matter when it comes to options, but what matters is the chain, the option chain. So you want to look at your bid versus your ask and see how much. If it's a $200 option, you don't want to see a difference in the bid and the ask more than $20. That's 10% is where your happy medium is. Right now, May 120 puts.
I was just going to say that like 220 volume on it.
Yeah.
So I mean,
you
could do it, but you're flirting with that $20 to $25 wide spread. So
yeah. So June expiration, right? Like you could see 135 to 120 debit spread. It's a $15 wide spread. So that means if it's $15 wide, it's $1,500 maximum value. Currently trading for $300 with a $24 spread. That's decent for a couple day swing trade after this break. This is a break of support. Like it's a very clear break. So here's your support level, 153, right? You see it? 150. Right in here. If you want to call it like a box, like Z, like it doesn't matter. Some people have been in Discord and calling this supply demand. It's whatever. It's resistance, man. But yeah, this is your break live now happening. 150 is key pivot, so you could be in for a nice little flusher. Yeah.
Oh my god! It should have been. I totally forgot to look at this.
What?
Unity.
Oh,
software.
Unity's another one.
Oh my dude, it's $52 now.
Oh yeah, she go. Yeah, like, and again, this is how my setup, right? So like 1 month, 1 week, 1 day, 1 hour, and then lower, maybe 15-minute time frame. But this is the only way you're gonna see this right here. Like look at that pivot. $65 was the opening low on this guy out of the gate, and this was also last month's low. So a couple days ago or a couple weeks ago, we hit it. That's a short. Yeah.
Yeah.
Bummer. I bet you that's still got a lot of room to the downside, like Roblox, right? I'm still short Pill.com. Yeah, oh, 25 bucks. Poor Roblox. You're just in like no man's land here. This could be a $5 stock. Like, you just got to be really careful. If you're not, I mean, what's the value of this company? Amazon is a very high PE ratio. A lot of growth priced into this company at this level, just to be fair. And it's not growing the way that it's priced. What was another one? I mean, Netflix isn't really like it was. We do have Disney coming up, so I'll take a look at Disney really quick. This one's a little bit more interesting. So we are breaking the monthly lows here, which were 110, right? 111 right there. So this is your monthly pivot low. Friday rejected right on it. So continuing to the downside. Now we have Friday's low, which happens to be last week's pivot low that we're coming up against right now. These guys do have earnings this week, so just be aware 2 days from now, this might be a little bouncy, counter trendy, but take a look at your downside targets are legitimately down here. Like if you're drawing boxes, see these little wicks down there? That's your actual demand or support. It's down between $90 and $80. So you still have, I don't know how many percent that is. What is that percent wise? God, I sound so bearish, man. I'm not intending to be. Oh, that's another 25%. So, just with the trend. And if you do get a bounce, 127 to the upside would be where you want to be a seller. If you get this opportunity to bail around there, yeah, 120. Oh, geez. 120 in this area. You got a lot of selling pressure for sure. 128. So you take your daily pivots, and if we do push, then you got this target 111 from 107. That's a couple bucks in the short term. But yeah, 111, you want to be a seller right now in this environment. Oh, that's so bad. All right, I think we're good for now, you guys. We'll probably have, I might have a calendar spread or something, like some kind of time spread that we could use for earnings on this guy. This has moved quite a bit. We'll see what kind of juice we can squeeze out of it. But for now, that's all she wrote. Cool.
Sounds good.
Yeah. Little moves. Trade safe. Don't take wild swings. Oh, look at that. Proctor. If you want a counter trend. There you go. All right. Cool. See you guys. Adios.